Good morning, ladies and gentlemen. Hello, everyone, and welcome to this live trading today. I hope everyone is having a good time so far. Just to double check, guys, please let me know if there is, if you have a clear sound and a clear video. Is everything okay? Let's just have a look. Okay, all right. Perfect. So, ladies and gentlemen, today is Monday, the 6th of February, and we experienced last Friday a huge unexpected result in the non-farm payroll number. As I've mentioned many times to you guys, the non-farm payroll outcome and the ADP on Wednesday, so today's before, supposed to give us an indication of how the markets will move and what can we expect. When I say how the markets will move, I mean what can we expect it to happen on the non-farm payroll, and based on that forecast, we can create a simple trading plan around the event. However, as I mentioned for so many months now, that never trust the forecast of that non-farm payroll, never, because especially the last couple of years, in my observation, it's just never happened. All right, it just go elsewhere, totally opposite the forecast direction. So let's keep moving, and just briefly to mention that this content is for general information only and is not intended to provide any trading or investment advice or any personal recommendations. So let's share the screen, and we want to have a look at the calendar. So how is trading? Do you guys hold any pair so far? Is anyone trading the Australian dollar against the US dollar? Sorry, I'm just trying to find the, I think that's the right one. So that's a premium analytic. Guys, let me know if you are currently in any trade. So today, Canadian dollar, PMI, we expect to have some outcome here that we don't have any forecast yet. Tomorrow, it's going to be a big day. The Reserve Bank of Australia will announce the new interest rate decision. They are not very aggressive lately. 3.1% currently, expected to go to 3.35. That's a small increase, at least compared to the Bank of England last week and the Eurozone as well. Then trade of balance in Canada on Tuesday. Guys, I will explain everything in the podcast. I will record it later on today. So keep an eye on the website. On the Spotify, you can download it. On Thursday, we'll have inflation rate in Germany. That will affect the euro. 8.6% currently. If it's going to rise to 8.9%, definitely we will expect some momentum to the upside. And on Friday, inflation rate in China expected to rise, and unemployment rate in Canada expected to rise. So let's move on. From the premium analytics, the morning briefing, and today's top headline: unbeat economic data keep investors on edge about Fed. You see, guys, the US economy added a whopping 500,000 jobs in January, while the unemployment rate fell to its lowest level since 1969, according to Labor Department data. Then Russia sanctions challenged tied US diesel market. Russia builds pressure on Ukraine along front line. Powerful earthquake strikes Turkey with fears of high casualties, and it was 7.8 magnitude. Moscow, Tehran advanced plans for Iranian design drone facility in Russia. Ukraine war makes an expected winner of Turkey's Erdogan. Russia sanctions challenge tied US diesel market. Pope Francis reaffirmed calls for acceptance of gay people. Twitter hasn't paid bill, M&A advisory firm says. And they're seeking about $1.9 million. So, guys, I see a lot of comments. Just give me a few seconds. I will go through them. Let's open the MT5 platform. So, good morning, all good. Good morning, Theo and everyone. I was short on pound yen and I was wrong. DAX, Eric, perfect. That's okay, Cherry. It's a part of the business when we get it wrong. That's the cost of our business. There are other type of business that have different cost. Our cost is when we don't get the trade right, but that's why we do risk management. What I'm buying USD Euro, waiting on AU on buy as well. Okay, gold, yep. Okay, that's a nice conversation between you guys. So that's awesome. I don't need to read it aloud. So, what about the people from Zoom? Only few people they answer about if they are holding any trades, if trading was okay last week. So we had a trade last week. We had a good trade on the US dollar, and let's bring this one. Okay, so we had a good trade. We short from this strong resistance because of the candlestick price action. It was pretty much 3-1 for most of the traders. Some traders they took 2-1. If it was a tight stop loss here and didn't play out, then some traders they might stop out, unfortunately, on that trade. And another trade, it was the euro against the Canadian dollar. Again, we spotted this resistance area here, and after this double top formation, we didn't take any trade, but after this formation here, then bearish engulfing. As I said, we can either sell from here or with a stop loss above there, or we can wait for a 50% retracement. We can get a better field, so we increase the probability of moving fast to the target. Euro against the US dollar. You bought it. Someone bought the euro. Let's go back to. I'm buying USD euro. You are buying USD euro. So are you selling the euro against the USD, because the way you write it, that's what I understand. Are you selling the euro USD or are you buying the euro USD? HV, no worries, it's all good. Don't worry about that. EuroCAD short, perfect. Darshan, let's have a look at the pound. Let's have a look at the pound. I told you we'll correct 350 pips. Awesome, awesome. Very good call, Darshan. No, I'm very far. Cyprus, the south part of Cyprus where I live, it's very far away from Turkey, so I didn't feel any earthquake. Did block trade in pound USD and oil. All right. So which block trade did you take? Are you currently, David, are you currently in this block trading and are you buying this? Or please write a bit more so I can understand. And I explain to the rest of the people. Do you see this a good area to buy the Australian dollar? Look, Australian dollar is currently at this support. It's an intersection also with this trend line support. Let's start with our analysis now. There are a few different opinions in the pound against the US dollar. So we have this, for people they know about block trading, this is a block here after a bearish candle, then a bullish engulfing in considered as an area of high demand. So when the price retraces back to this area, we do expect to see some purchasing power. Now, what people usually do with the block trading, they just mark it. We just mark it like this, and we go to the 4-hour chart, and we find the origin of the move, and it was right down here, so we can have a better entry. Others, they even go to the 1-hour chart and they try to find the lowest here, something like this. I mean, that's okay. I don't do this very low stuff. This is 80 pips for pound against the US dollar, 80 pips on the daily chart. It's a fairly good feeling price. Now, David, if you kindly let me know, where did you got into the pound block trade, US dollar and oil time frame, please? Good day, Theo. I'm looking to sell Euro USD. Good idea to sell Euro USD. Let's go at the Euro, but let's just face it. It's still on the free fall. We don't have any sign of buyers coming in. So still the 4-hour chart, it's on a sell-off. If we're going to have some activity, I expect this activity to come around this area. And what about the euro against the US dollar? For me, really, I see this market coming all the way here on the 4-hour chart. It's something like this. That's where I believe the market, it has a room to move. There are definitely some obstacles right here at this support, but if we see the market character, guys, we do see these higher highs and these strong buyers. Now you see how much volume within these candles, and then we have almost the same amount of candles, but with so less volume. They created a higher high, but in a very low volume sequence. Then we have just a sharp move to the upside, and then the sellers reverse more than 100% of the move. So I wouldn't rush to buy like this on the daily. The euro against the US dollar. For me, it's still a bit early. I think this market has more to retrace, especially if we use the fib retracement. Currency pairs, they go at least most of the times to 50% before they resume. We are still above the 50%, and we can also see it coming all the way to 61.8. So I wouldn't rush to buy it. USD CHF, we talked about the possibility of seeing a higher high, especially if we clear some resistance here. So this is our last high. The market has to break above this high to create a new high, and then we're going to start looking for buys as trend followers. But if we are trading like block trading, if we are trading something different than trend, that's totally fine. Remember, guys, and here is something that many traders, and I will send it on Telegram, want to watch your briefing. Okay, thank you so much, David. I appreciate it. Guys, at this point, I like to pause for a minute the technical analysis, because it's something, the market analysis, because it's something that traders, they get it so not wrong, but they get misinformed by many educators out there, and many other people, they claim to be the gurus. All right. My purpose here, it's not to tell if someone is right or wrong. I'm not a judge. I'm also a trader. I'm an educator. But there is something in Forex trading that, how do we learn how to trade? We use technical analysis from the past, and because it gives us a statistical edge, we use it to predict the future price movement. Right, like here it's a 200 moving average, here it's a 50 moving average. If the price comes here, we can see some reaction and the price can maybe reverse to the upside. Or here it's a horizontal line, here it's a trend line, and so on and so on. Now, when we are trading stocks, and that's something I will teach you when we go to the stock trading and investing, actually investing, not stock trading, because it's a different mentality we apply when we want to buy low and sell high. When we use leverage, we must have different mindset and different approach, because we cannot afford to open a trade and just leave it on the hope that it's going to come back. When we invest, let's say we buy the Apple, and let's say it's on the $100, okay, it's trading for example. Let's say the price, and we buy one lot, it means we buy one share. Let's say the price, we don't have leverage, it's purely investing. Let's say the price of the Apple in the next 5 months dropped to 50%. So now it's worth 50. We still own one share of Apple. We still have one share of Apple. Regardless if the price now dropped, we didn't stop out on any trade. We are still holding that share. After we don't pay commissions in Admirals, we don't pay swaps and all this stuff. No overnight fees, nothing. If this price, then it's going to move to 150 over a period of time, we are profiting 50. But because we don't pay any swaps again, we don't pay overnight fee, we have $50 pure profit. If we clear the trade, we're going to get away with $50. So the fluctuations, what I want to say is that the fluctuations when we invest, they don't affect the psychology of the investor because it's not sitting at a risk of losing his or her account. Whereas using leverage, if we try to apply most of the trend following techniques we apply on investing, it doesn't work most of the times. And if we do something that is inconsistent, then it leaves us with more losing trades, but not only that, with low reward to risk. So the more losing trades, they should come with high reward to risk to make money, but it works the opposite. All right. And that's because we try to apply the same mindset. We apply the same techniques, but we cannot apply the same mindset. That's why when we trade, especially Forex, we are purely speculating on the price move. So candlestick pattern, I'm not saying we don't trade trends. We definitely trade trends. But we have to take in consideration more factors like the candlestick patterns. They have to be more accurate. Our levels, they have to be as much as accurate as possible. And we have to be very strict in our rules. All right. So, for example, price comes here. All right. And we see some sort of, if we buy right here, where our stop loss will be, most likely somewhere below here. But if the market here, it's what we call an order block. Okay, let's take this one here. Here is the room of the market to retrace and come up to here. We have to make sure that we can take our profit by the time the market comes up to here, or by the time taps into this area of liquidation, into this seller zone. Okay, so we have to be to understand that it's not a perfect picture, and we must apply too much of accuracy. That's why you see my trading is extremely highly selective. But when I get it right, it goes on 3-1. When I get it wrong, it loses 1. But this came with now almost 11 years of active trading. Okay. And that's why some people, they said, you don't trade that often. No, I don't trade that often. But when I do trade, I have a high probability to make 3-1. And if I risk 2%, I risk 1%, sometimes rarely 2% now, but on a big account, if I risk 2%, it means that 3-1, it becomes 6-1. What if I take 2 trades a month and I make 12% profit, and someone who trades every single day, it makes 5% of profit? So we have to see our personality in trading. We have to see what's the ideal trading, the ideal type of trader we want to be. Okay. And to be open to understand many different ways of observing the market, and of course our entries and our exits. All right. And that's important. It's not like the market make a new high like this one here. Okay, the market make a new high. If I buy here, where my stop loss will be? It has to be somewhere there, right? But the market didn't even move 20% above this high. So how am I going to profit? And then I'm sitting in 1, 2, 3, 4, 5, 6, 7, 8. That's the 9th day. Not only on losing, that's fine because our stop loss hasn't been hit yet, but I'm sitting 9 trades on paying swaps and commissions. Sorry, not commission, just swaps. So to break even, I need to make, let's say, the first 20 pips I will make, or 30 pips, maybe they will cover the break even. So it's important to have some accuracy as well in our trading. Regardless, we're going to miss some trades, some entries. It's okay. There are way many opportunities in the markets. Okay, so bravo, you should get a Nobel Prize. Darshan, my goodness. What will you say are the top 10 traded currency pairs you can? Okay, I'm not going to advise because I'm not allowed to advise, but the 10 currency pairs that I personally trade are the 7 majors, of course, and then I'm open to price action pairs, guys. It's about price action. I'm not going to say I have a favorite pair because unfortunately I don't. The only favorite instrument I have is the DAX because I traded right on the London Open for maybe 5-10 minutes if I have the signal, and that's it. Okay, but for sure you have to observe the majors, for sure, at least the 7 majors. USD yen, it broke above this trend line resistance. It gapped so much. Now it's coming back to fill this gap. We are in this area that we already marked in previous weeks. It's been 3 weeks we marked this area. So some people, they may sold here. Stop loss can be above here. We will see what the market will do there. The euro, very choppy. It just apparently they all open with a big gap, 100 pips on euro yen gap. I mean, it's insane. Pound yen, Cherry, you shorted the pound yen. Okay, on the intraday, how to interpret and approach a gap on pound yen for hour is one. Okay, now, guys, I will tell you about the gap in the Forex market, okay, because it's totally different to trade gaps in stocks, because every day stocks pretty much they gapped because the market closes. Here in Forex, the market technically theoretically closes, but actually it doesn't close because it's 24/7. I mean, you go from New York session to Asian to London session and repeat it. So if we trade gaps, we have to be on alert at 10 p.m. GMT time on Sunday for the market open and to trade on a lower time frames this gap. Like today, for example, we had the pound, just as an example, okay? And that's on Monday, obviously, because if you try to trade a gap tomorrow, you're not going to have a gap, most likely. So on Monday, we have this today in the morning, 5 minutes after the open, we had this price gap here. It was about 20 pips. Now, with this inside candle here, we could easily trade the gap. When I used to live in Australia, and the time it was an ideal morning time for trading, I was every single Monday, I was just looking for the gaps and I was trading them really well. Okay, but now living in Cyprus, it's not ideal. I don't even want to stay away until midnight until the market will open to trade the gap. All right, so I don't do it anymore. And someone you could buy here and you can just wait until the gap will fill. Same with the euro, same with the Aussie. Let's see the Aussie, because during the Asian session and the Sydney session, the Australian dollar, it's more tradable. So we had this gap here, 24 pips. It opened right there. It closes there. We could easily take with 7 pips stop loss. We could have taken 2.5% profit in literally what 1 hour. Okay, or 3% profit for more aggressive traders and so on. But my suggestion is if you trade the gap, the time you trade them has to be relevant. So before the market move, because after the gap has been filled, then what left? The order has been filled. It's nothing there. You feel, Darshan, I don't feel anything, mate. I trade what I see, not what I feel. I don't feel. Yes, but spreads are too wide at that time. That's true. That's another issue. I wasn't working at Admirals at that stage, and I used to use a commission-based broker when I was trading, because I was trading on heavy volume, not just a couple of lots, but heavy volume. So it was on my benefit to pay some commissions and have the lowest spread that I could have during the liquid market hours. So it wasn't an issue. You expect based on your expert technical analysis and reading. So about the pound will drop. Look, there is much more room, in my opinion, for the pairs to drop. And to be honest, I have this area of support, because now we bounce through this resistance. We can see some more weakness here without guys, you have to also understand something. We do this live trading session just before the London Open, and usually the markets before the open, they make a move against to the prevailing trend, and then at some point they just melt if we are talking about short. But there are times that market decided not to go in the direction we predict, and really that's fine as long as we are consistent for that. I will keep an eye on the pound, because it's still we didn't see any reversal, so we can see some continuation to the downside. Let's just go very quickly to have a look. By the way, now I got a few more minutes, 5-7 minutes more for the webinar, so it's perfect. We can talk a bit more. Actually, I can talk a bit more, and you guys can type a bit more. And Darshan, you don't need to comment on that to my friend. That's okay. Let's have a look at the indices. We are interested at the DAX 40. So DAX 40, we had this inside candle. We expect some bearishness, at least for this move, but let's have a look. Let's spot that was 9 o'clock, and that was the 10 o'clock. Come on, why doesn't it stay? 950, 955, 920, that was the 9. Okay, let's see where this price action will close. Monday morning, first trade for the DAX, a bit more technical on this one. We have this double bottom. Market is trying to break to the upside. Most of the traders, if we don't have this false, if this is not going to be a false breakout, maybe we can see some push to the upside. However, The trend on the daily is up, the price action is down. And how do I like to play this? I just box the last hour prior to the London Open, and I'm waiting for a breakout, ideally to the downside, but we can see also a breakout here. Let's see what will happen. Indices are better trader within every short period of time, like 1 hour and 4 hour. Yes, indices are not much easier, but they are easier to trade because they have less false signals rather than Forex, and that's true. But again, it's everything is tradable, everything can be traded. But yeah, if we have to compare Dow Jones, if we want to trade, I believe we stick to New York Open to trade. We can bearish engulfing on the daily, on the 5 minutes, can push to the downside. Definitely, we are in this 5-minute downtrend. Can really switch direction on the US Open. Yes, exactly. So, and that's why I like to trade the US stock, the US indices around the New York session, and I prefer to trade the DAX and the FTSE sometimes, but mainly the DAX during the London Open. Here it comes. If we break to the upside, then we can have a good run, I can say, at least to retest this 200 moving average on the 5-minute chart. Okay. So moving higher, we have this 5-minute obstacle here. So if you hold position, just be careful around this area. All right. And pretty much that's how I trade the DAX, guys. And that's when I trade it, it's simple as that. I don't sit around and look for currency pairs. Just one good trade in the morning with DAX, and that's it. Now we are approaching the 200 moving average. That's on the 5-minute chart. Previously, on the 200, it stopped. Usually, the 200 moving average in a downtrend act as resistant. Darshan gold could not push past 2,000. Maybe it can, who knows? Okay. Darshan, do you feel gold that it's not going to push past 2,000? All right, now we are pushing higher. I think that's, for me, that's pretty much it for the DAX, to be honest. When everyone is getting excited, smart traders like you guys, like us, we simply just get out of the positions. Okay, so we're going to go more in detail with the DAX trading. That was just an introduction. I don't know if you guys put a trade here. Usually we said we put a buy stop and a sell stop. If one failed, we cancel the other. We go for around 6 pips, maybe 10 pips, depends on the aggressiveness, and we just call it for the day. Still pushing higher and higher. Awesome. Guys, it was a privilege and honor to host this webinar for you today. I hope everyone had a fantastic session. I hope you found some value. Please make sure you like this video on YouTube, and of course, subscribe on the channel. Keep an eye on the podcast later on today. And I wish you happy trading, and I look forward to see you tomorrow again at the same time. Thank you so much. Bye, everyone.